Hi, this is Zach Meir with the St. Patrick's Day edition of the Bulletin Board Heroes here at Vox Market. Starting off with Agronomics, where there's been a bear trap from below 15 pence, breaking that line of resistance from November at 16. And looking for the shares to head back up towards post-December resistance around 22, 23 pence over the next couple of weeks while we hold above 16 pence. Given the position in the range and where we've been up to the low 30s, the risk reward here seems to be relatively attractive for the longs. Moving on to a stock where there was a speeding ticket RNS, which is one of the happier things that you can see on the stock market, I suppose. Company not knowing, or Barclay Energia not knowing why the shares have risen so much. I suppose it might be something to do with uranium and alternatives to Russian energy supplies. But here we are, we hit the initial target that we had, 24 pence, which seemed rather ambitious when the shares were in the mid-teens, but we've achieved that very quickly. And the view now is that above 24 pence on an end-of-day close basis, we could see a new leg up for Barclay as high as 42 or 43 pence maybe by the end of next month, which is an April 2021 resistance line projection. So looking pretty set fair for Barclay at the moment while it remains above 24 pence. Another stock which seems to have finally livened up after a long period in the wilderness is Boliden. We've had two unfilled gaps to the upside over the last month or so, and it's a pretty good charting signal. Bigger picture, you can see that we appear to be in a rising trend channel from the beginning of 2020. We've broken that line of resistance there at 3 pence or so from February last year, and above that, the 8 pence. So we're basically retesting last year's resistance. Could be on the cards over the next 1 to 2 months, and perhaps even sooner. Good to see CapEx back, stock which knows how to move when it moves. Here we've got a situation where the shares have been in a bear market for quite some time. The good news, I suppose, is that we bounced off this falling line of support from back in October around the 4.25 pence level. While we're above that, looking for at least the 200-day moving average just shy of 6 pence. Best case scenario target maybe over the next 1 to 2 months up to 7.5 at that the top of the triangle from August, and the upside valid while we hold above 4.25, so not risking too much at this stage. On to Deep Verge, which seems to have sorted its finances out today with the announcement and an acquisition as well. Here we've got the shares bouncing off that falling line of support from March last year, double test of that. Looking for them to break 14 pence, which is that January resistance line we had to go a couple of weeks ago, but back to test support now, just below 13 pence. And the bigger view here is that while we're above the 12 to 13 pence area, looking for 22 pence at the top of that channel from back in November. Moving along to Eve Sleep, which has arisen today quite sharply. We had the bear trap gap reversal, or island gap reversal, basically the end of last month. Came back to test for support at the floor of the gap, around 1.8 pence, and bounced well now. Also got a bullish divergence line there in the RSI window from December, and that should be helpful as well. End of day close above the 50-day moving average at 2.3 pence should be enough to take the shares up to as high as 4.25 pence, maybe by the end of next month, something like that. But that gap fill rebound looking quite interesting at the moment. On to a stock which seems to have acquired a whole lot of new keen followers. Here we've got Osirium up 20% today, or nearly 20% today. Here we had a sort of a W-shaped reversal. There's a little gap there as well, so it was a gap fill and then a rebound, which is like Eve Sleep. Current situation is we've got new support around the 6 pence level, which was the initial March resistance, so that's a positive. Initial target here, obviously, the 50-day moving average around 8.5 pence, or nearly up to 9 pence. And an end of day or a weekly close above that could then open up the shares for a 15 to 16 pence target, which is where the stock was at the beginning of the year. So reasonable risk reward again there, above 6, looking for 15 or 16. Moving along to a stock where there's been a sort of a rather nasty bear trap. We've got Overcare Bio, and the situation here was that we basically had support around the 11 pence area, sort of double and triple bear trap below that level, and now we've flipped higher than that, so above 11. Looking for the shares to perhaps get up to 15 or 16 pence, or 16 or 17 pence, which was resistance on the way down. But if it is a bear trap, then obviously we could see higher prices than that, even up to that temporary peak that we had back in February at 25 pence. So keep an eye on that. Haven't looked at Rambler for a long time, so it looks like a good time to do so. Here we've had a narrow bear trap from just below the February low, so that was around 27 pence. Two-day bear trap below that earlier this week, and above 27 pence, looking for a retest at the top of the range, 34, 35 pence, maybe over the next 2 to 4 weeks. One of my favourite situations at the moment, even though stock has been a bit of a difficult one, let's say, over the recent past, is Renuron. Here we've got a situation where there's a bullish divergence line there from back in January, so that has helped the shares recover from the bear trap below 29 pence that we've had for the first part of March. Above 29 pence, looking for the 50-day moving average of 40 initially, and then that resistance line, the top of the triangle there from January, up to 50 pence, perhaps as soon as the end of next month, powered by that bullish divergence in the RSI window. More obscure situation comes, or even more obscure situation comes from Rotala. And the reason for looking at this is that we've had an unfilled gap to the upside off the lows, which can be one of the best signals that you have in a stock or a market. We've also managed to undo the bear trap below 24 pence, the low back in March last year. So above 24 pence, looking for 34 pence, which is a June resistance line projection. Admittedly, this stock is not exactly the most liquid in town, so I'm sure the spread is quite awful. Moving along to stock which did well going into the autumn, but since toppled from it, well, it lost its gains, I suppose. Here we've also got a gap off support, so we're looking at the shares bouncing off the £1.40 area. Bottom of the gap there at 145. Above that, looking for a return towards the 190 to £2 area, which is the area of the 200-day moving average, and also where the shares were back at the end of February. On to a stock which is looking rather volatile but improving. Here we've got Tintra. See, there was a trend line break there from the end of February around the £1.83 level. Above that, we're looking for a retest of the best levels of January, as high as £3.50 maybe over the next couple of months. So what's in favour of the situation here, apart from the trend line break, is the way that we've got a very sharply rising 50-day moving average. That's around the 201 pence level. So if you're looking for a tight stop there, that would be the place, and end of day close back below that, ahead of a possible move towards the 350 level. On to the last stock of the day, which is one which I'm pleased is starting to recover. Looks like a bear trap from, basically below the 2.5 pence area, which was the last February intraday low. So above 2.5 pence, looking for Westminster Group to revisit the January peak, 2022 peak at 3.8 pence. The other positive here is the bullish divergence, which means that we had a lower low for March, but a higher RSI low versus December. And to throw into the mix also it's worth throwing into the mix the way that we've broken that trend line there at 2.6 pence, which is a resistance line there from back in November. So above the 2.5 pence area, really looking for towards the 3 pence zone, the 4 pence zone rather, by the end of next month, or perhaps even sooner. That's it from me today. More updates tomorrow.